Hello and welcome back to our YouTube channel. My name is Ken Omolo, and on today's video I will be showing you guys how to grow a small account in Quotex and make money with it. So my account at the moment has $13.31 and we want to grow that and see how much we can make by trading on Quotex. If you don't have an account in Quotex, there is a link on the description of this video. You can click on it and create your account. If you already have an account and would like to use the strategy that I'll be using on this video, log in and deposit money into that account to begin trading. Otherwise, let's get started. So the strategy that I'll be using today is a technical analysis strategy. It involves using the RSI, using the stochastic, and using the Bollinger bands to pick signals. If you are already familiar with this strategy, thumbs up. If you don't know how this strategy works and would like to know how it works so that you can use it in future on your trading, then watch this video to the end to learn everything that we will do. So I'll strip the chart of every other tool that I've already added so that we can start afresh. So the first thing that we need to do is to click on this indicator tab. Okay, once we click on that, we click on Bollinger bands. The Bollinger bands, we will change to period 21. Let's do period 14. And the deviation we do 3. Okay. So the principles of the Bollinger bands are the same, are very simple. If you look at the Bollinger bands, you will notice that there are some areas where it has widened and there are some areas where it has shrinked. When it widens, it means that there is a lot of volatility in that market, and therefore if a trend begins, it can continue for longer. For example, if you look at this point here, you see that there is an expansion. For example, if you look at it here, you see that there is an expansion, and prior to that expansion, we had sort of a shrink. And if you look at that shrink, it sort of shows that there was an indecision in the market. The market was moving sideways before it broke out and started moving upwards. So there is a chance that it might continue moving upwards for longer, and that is where you should be targeting with your trades. Otherwise, you can still trade on these levels here. These are called the Bollinger bands. When the Bollinger gets to the bottom of the band, consider that band your support level. So what do we do on the support level? We trade upwards, and if it gets to the top band, then we consider that Bollinger bands on the resistance level, so we can trade down on that. But the most ideal way to trade with the Bollinger bands is to wait for a break. For example, you look at it on this level here. It has gone above the SMA in the middle, and if you look at the steadiness of the candlesticks that are forming after that, there is a lot of money to be made all through to the top. So there are a lot of instances that you can see. If you go back in history of this asset, you will see a lot of levels where the Bollinger band went above the 50 level and it continued upwards and it continued to expand. So the main reason why we are using the Bollinger bands is to see the volatility that is in that market. Yeah, because volatility drives price. Okay, if there are a lot of people trading towards a direction, then you can trade with them towards that same direction and continue to make money in Quotex. Remember, we are doing binary options trading, and in binary options trading we make money with scalping. You scalp little by little and make money as you go. If you look at the results here, you can see that the last time that I traded with this account was on the 21st of July. I've tried today with $2 and made $3.74 on that asset. So I've already added some assets here that I'll be looking at. We remove the ones that have lower rate of return, these 30%. We don't need them. So if you want to add these assets onto your chart, just click on this plus sign and look at the rate of return that it is offering. If it is something that you'd like to add onto your chart, just click on it and it will be added to the chart. So the next indicator that I want us to add to this chart is the RSI. So we will go for the RSI, also known as the relative strength index. It is used to tell when the market is about to reverse. For example, if you see this moving average go above the 70 level on this chart, then it means that there is an imminent reversal. If the market goes above the 70 level, we say that it has been overbought, and therefore we are expecting that soon afterwards bears will push the market downwards and we will see a change in trend. If the market goes below the 20 level or the 30 level in our case, then we say that the market has been oversold, and we are expecting that buyers will kick into that market and begin pushing prices upwards. A good example of a place where the market was oversold is this area here. You look at this level here, you see that the moving average is below the 30 level, and if you look at price, you see that price has started moving upwards steadily. If you want a lot of signals with the RSI, then you will need to change the periods here. For example, the oversold, you can do 20%, and the overbought level, you can do 50 or 60%. Okay, so let's change that, and you will see the RSI moving upwards above those levels more frequently. So the disadvantage of doing that is only one: you will get a lot of signals that may not be accurate, and that will be entirely up to you. And that will be entirely up to you. So I'd recommend that we just leave it at 70 level and leave it at 30 level, and instead of relying fully on the RSI, then we also add the stochastic indicator to help us with picking the reversal points. Remember, the RSI and the stochastic indicator are both oscillators, and their work is to show us when the market is overbought and oversold, and to show us possible reversal points in the market. So this is the RSI. It has period 30 and period 70. We can change that to period 80, to overbought level 80 and overbought level 20. Okay, so that we get fewer signals from the stochastic but more accurate ones. Okay, so now we have all the three indicators that we need to begin trading. So the next thing that we need to look at is now the signals. What signals are we looking for in order to begin buying or selling in this market? We are looking at the Bollinger Bands going above the 50 level. Yeah, if the Bollinger Bands is above the 50 level, then we look for confirmation. Look at what the RSI says. As that moving average gone above the 30 level from below? Yes, it is above the 30 level from below. And the third one that we need to look at is the stochastic going above the 20 level from below. If all that checks out, then if you open a trade here or here, then you are going to win on that. So we need to use the same principles in our trading today. We'll be using the Bollinger Bands to pick our signals, then use the RSI and the stochastic to confirm them. So we can move from one asset to the other in search of that. You see the Bollinger Bands is beginning to expand. You see that the stochastic is above the 80 level. You see that the RSI is above the 70 level, and therefore we expect an imminent reversal. It might not happen in 1 minute, so we need to change that to 5 minutes so that we give the market a lot of time to adjust. So we'll trade down on that, being that we are expecting that the market is going to reverse over time. So we've given it 5 minutes. We'll let that run in 5 minutes while we scout for other signals that we can also trade on this chart. So the next trade that we are looking at here is this one on the AUD CHF pair. Even though the market is choppy, there is a lot of potential in this. Maybe we might see a reversal here, so let's give it a minute and see if we can trade the bounce on that. Give it a minute. We look for crossovers between these two moving averages. If the green moving average crosses above the red moving average, then we will enter a trade upwards. We also need to keep an eye on the RSI. If it continues staying above the 30 level, then you can trade up with it and expect that the market will go back to the top, to the resistance level. Remember, we are using the Bollinger Bands for both volatility and as support and resistance levels in our case.